Alright, what's up everybody? I recently completely stopped trading breakouts, all except for one pattern, which I'll talk about later, and my win rate has gone up very dramatically since then. Since I started trading, I would usually have around a 50% overall win rate, and now over the past couple of months, I'm usually around 70 to 80%, so this is a very big increase. The big jump isn't only from this change. I've made a lot of other modifications to my trading also, but I would say removing regular breakouts from the list of patterns I trade probably had the biggest impact. The main problem with breakouts is that when there's a really big, quick change in price, there's almost always some sort of price correction or pullback. It's very rare that price will go up quickly and just keep going up from there. Also, depending on where the breakout happens, it can also end up being a fake out, causing a huge sell-off and quickly reversing into the other direction. This used to happen to me a lot, and it was very frustrating to have so many losses because of it. What I do now is I trade almost all of these breakout type patterns as a trend continuation instead. There are really only 4 things that can happen when you see a big breakout bar. Once you know what could possibly happen, it makes it much easier to know what to do while you're actually trading these patterns in real time. So I'll show you what these 4 different things are, go over the strategy you need to use while trading each one, and then we'll look at some of the recent world examples of these happening. So scenario number 1, when you see a big change in price, the best thing that can happen is that it keeps going up very quickly with little or no correction. This is called a parabolic move, and that's when a move in price will go up and just keep going up. These types of moves, you would never enter these while the price is going up because there's no good way to actually gauge where it will end up going. Instead, you would trade these as a reversal. These work very well because price can only continue going up in a straight line for a limited amount of time. The win rate on these patterns is very high for this reason, and this is actually one of the patterns I trade all the time. This is called a parabolic top. So in that situation, you would wait for the first solid top to form, give it time to put in at least a double top of some sort, and then enter the trade, usually at the second color change bar. That is the safe and easy way to make a profit from these big, fast moves upward. Also, one of my favorite patterns to trade. The trades usually finish in just a couple of minutes, 5, 10, 15 minutes, 20 minutes at the most, which is always good. So let's go ahead and look at a real world example of this happening. This trade was from March 18th, which was last Friday on the USD JPY during the London and New York crossover session. So you see we had this really big move up here, puts in a double top, and then comes back down. So let's see what that will look like in real time. So you see we get our first really big move up right there. He wouldn't touch anything yet. And it's continuing to go up, continuing to go up, continuing to go up. At this point, we know that it's going to continue going up really fast. Now it's definitely in a parabolic state here since it's so far away from the EMAs. We have our first color change bar there. And now we have a double top, a really shallow double top, and we have 2 color change bars. So you could enter into a trade here. And you would put your stop loss up here. And then your take profit would be, kind of guessing here at it. I'm using one hand to hold the mic, and then yeah. Somewhere down here would be your take profit, whatever 2 is, that looks about right. All right, so that's where you would enter the trade. And you see the trade would go through right there. And I believe that took maybe 20 minutes. 20 minutes to go through. So that's if you went for 2 reward. If you went for 3 reward, that would be around here somewhere. So let's see if we'd be able to get that too. We'd be able to get 3 reward too. 4 reward is probably asking for a little bit too much. Usually you would go for 2 or 3 at the most. And you see that the difference between 2 reward and 3 reward was really like 5 or 10 minutes. So in this example, it's usually not like that, but in this particular example, 3 reward would have been the better of the 2, but 2 reward is always good. So then we have scenario number 2. This is the second type of pattern you would be looking for once you see a big breakout bar, and that is the consolidation trend continuation. You want to wait until you see a tight consolidation of 2 or 3 bars. It can be more than that. It really doesn't matter as long as they stay within the consolidation zone. You would then put your buy stop order above the consolidation zone, and if the price continues up past the consolidation, you'll automatically enter the trade and take profit at least 2 reward from your entry. The reason that you use a buy stop instead of a market buy order here is this could turn out to be a retrace trend continuation if it goes down under the consolidation area, or it could even be a fake out completely into the other direction. And in those 2 scenarios, you wouldn't even have been entered into the trade in the first place, and you could go on to enter in one of those other patterns instead. This is a quick and easy way to avoid losing trades for no reason. Very high win rate on these also, and they're very common. You'll see these happen pretty much every single day. And let's go ahead and look at a real world example. This was on March 17th on the NZD USD pair, a little bit before the London session open, which I honestly advise against trading before the open. But as an example of what the pattern looks like, this is a really good one. So we'll use it for demonstration purposes. And of course, if you actually did take the trade, it would have worked anyway. So let's go ahead and do the replay. Let's see. All right, price is consolidating. We have our first decent sized breakout bar there. Now we got our big breakout there. And this is our consolidation. So you would enter the trade here. You would place your stop down here. And then your take profit be right in here somewhere. All right. So let's see how that will play out. All right, the trade would go through right there. So that took about 45 minutes, almost an hour. So really quick, easy trade there. Most of these trades, especially trend continuation trades, usually go by pretty quick. They usually take less than an hour and a half, pretty much every time. If you go for 3 reward, it'll take usually a little bit longer, usually more like 2 hours. But yeah, with these trend continuation moves, you usually can go for 3 reward. I almost always go for 2 reward just because it has a higher win rate and it's faster, it's easier. I'm less worried. I don't like to lose trades for no reason, so 3 reward, you'll probably ultimately make more in the long run, but 2 reward is just a little bit. 2 reward is a little bit less stressful, and you'll maintain a higher win rate overall. That's usually the way that I like to go. Moving on to scenario number 3, we have the retrace trend continuation. This is also a really good outcome, and usually this pattern will get you the most amount of reward compared to all the other patterns. You've got the breakout momentum in your favor, and since it pulls back so far, it gives you more space to get gains from. The way this works is you have your big breakout, a small pullback, and then another big move down. You then want about a 50% retrace back towards the top of the pattern. Usually you'll get a small consolidation when this happens. You would set your entry right below that consolidation area and set your stop loss right above it. This pattern can easily get you at least 3 reward, most of the time, if not 4 or even more than that. But you can always go for 2 reward to be on the safe side. Extremely high win rate for these patterns, also very common and one of the easier trade patterns to get into since they form kind of slow. So this gives you a lot of time to decide where you want to place your entry. So let's look at a real world example. This is actually just a little bit before the last pattern that I showed you on the same pair, the NZD USD. So let's go ahead and look at the replay. So we have a really big solid move upwards. We got our first color change bar, first top. And we get our second color change bar and second top there. So this move upward is a little bit too strong for me to want to enter this as a parabolic top, although it is a parabolic top and I believe it does end up working. But I would wait for a little bit more of a pullback here. So we've got our big breakdown, little move back up, and then we get our giant breakout there. So what we want to look for now is a 50% retrace back up towards here. Okay, so we have our 50% retrace. We got 2 color change bars. This should be a good place to enter here. So you go ahead and put your sell stop underneath that small consolidation we have, and you put your stop loss up here. Actually, since the trade hasn't triggered yet, we can get an even tighter entry here. We'll keep our stop loss up there. All right, so the trade would have triggered by now. And then let's put some take profit. Let's see. Two reward would be here. And 3 reward would be right about here. I would measure it. I just don't want to have to put the mic down. So let's see. These are probably about right though. Okay, well, it actually went 2 and 3 reward at on the same bar. So, but like I said, these retrace trend continuations almost always go 3 reward, probably more like 4 reward. So let's see if it actually ends up going that far too. Yep. Okay. So in the next 10 minutes, it actually ended up going 4 reward. These like I said, these are the highest. These will give you the highest risk to reward ratio compared to all the other patterns. So if you see a retrace trend continuation, you can almost always go for 3 reward. So the final thing that can happen when you see a big breakout bar is actually the worst thing that could happen, and that is a fake out. I'm sure this has happened to you before. You see a big breakout move and decide to get in, only for it to reverse hard in the other direction and cause you to get stopped out of your trade. This pattern is actually what made me stop trading breakouts in the first place, and is the reason why I ended up doing a lot of research and back testing to come up with a solution to get around it. Basically, the fake out is the reason this entire video even exists, but there are ways around it. So let's say you have a nice breakout into a consolidation trend continuation pattern like this one here. You'd place your entry below the pullback consolidation area and stop loss above the consolidation area as usual. The trade triggers and starts to go through. You get into a decent profit, and then all of a sudden the trade reverses very convincingly into the other direction, and you end up getting stopped out of your trade. Very frustrating, I know. But through a bunch of backtesting, I discovered that this almost always means the trade will continue going in the other direction, usually for about 4 reward worth of pips. So what you can do is enter a new trade in the other direction once you see a proper entry pattern, either another consolidation, trend continuation, or a retrace, and you'll most likely end up winning the new trade in the other direction. This works most of the time, but only attempt this with big momentum swings. If the price slowly reverses in the other direction, it's more likely just another pullback instead of an actual fake out. Also, I would limit this to just 2 attempts. You lose the first fake out trade, you can try for a setup in the other direction. If both of those fail, I would say that it's time to forget about that move and wait for something else. If you do win the second trade, you'll at least get 1 reward, since you lost 1 reward on the fake out and then gain 2 on the new trade. All right, so let's go ahead and look at what a fake out would look like in real time. So here we've got a pretty slow dribble down, nothing really too exciting yet. And we get our big breakout there. And then we get our nice little consolidation area. So let's say you entered the trade here. And we put our stop loss here. So let's see what happens. All right, so we get a really big bar into the other direction, and we actually ended up getting stopped out of our trade there. So what you would do now is start looking for a proper entry in the other direction. So we're looking for either a consolidation or a retrace, and we pretty much have it there. So we'd enter a new buy stop here. And stop loss there. And our take profit would be somewhere in here. All right, so the trade would have been entered right there. Very close to the stop loss, but we didn't get stopped out. And the trade would go through right there. So that's a perfect example of a fake out. You would lose 1 reward on the first trade that you lost, and then you would gain back 2 on the fake out reversal trade. So you would at least get 1 reward from that. Like I said, I would limit it to just 2 attempts. I wouldn't keep trying over and over. But this works most of the time, especially with these really big momentum swings like this. Definitely something to look out for. Try it out for yourself and let me know what happens. So those are the 4 different scenarios you'll most commonly see with big breakout bars. If you try and enter the breakout right at the first bar, you will lose so many trades trying to do this. You just simply have to be patient and wait for one of these patterns to form instead. Always use stop orders to even further prevent losses also. I do want to mention though, there is one type of breakout that you can trade on the first bar as soon as it forms, and that is the consolidation breakout. This video is getting to be kind of long now, so I won't fully explain the pattern here, but that is the only breakout pattern I feel comfortable entering into right away, and it also has a very high success rate as well. All right, so I hope you enjoyed the video. Let me know what you think about my strategies, or if you have anything to add in the comments. I did need a little break from making videos to handle some other things. Actually, still working on my FTMO verification right now, but I do plan on putting out at least one video per week from here on out. So make sure to like the video and sub to the channel. Remember to always trade responsibly, and I'll see you guys later.